evens are trading here now, guys. 82 evens are trading. Paper comes in a big seller. 81 evens are trading here now, guys. 79s are trading.
What is going on, traders? I am trying to do my best to bring you one YouTube video a week. And let me tell you, I love that flash crash audio from a time where the markets were going straight down as part of that 2010 flash crash. It just reminds me of the framed photo I have on my wall. Wall Street panics as stocks crash, billions lost, wave of selling engulfs the financial market. And that's dated October 24th, 1929. So always manage your risk, and that's partially why I've got that introduction the way I do. So anyway, this video is gonna give you a little tip on contract rollover in Sierra chart. I'll explain some things and let you guys know the way I do it and why, and then I'll show you a quick little trade that I took and why I took the trade today. Without any more delay, let's get into it. First of all, we have in Sierra chart the ability to roll over our contracts according to the symbol settings, and we can roll those automatically, or we can turn that off and roll our contracts by volume, meaning when the most recent, or when a contract has more traded volume than the one that is currently in your chart, Sierra chart will say, hey, we suggest that you roll that contract, and so you can control those settings. So let me show you here. So I'm right clicking on my chart, going to chart settings, and you see this automatically roll over future symbols. If you select that, what happens is that Sierra chart uses your global symbol settings for the thing that you're trading, f.us.ep. Okay, that's the symbol for CQG, and what it does is it will use this rollover method. Okay, 8 calendar days before the third Friday of the contract month. Okay, which would mean they would roll over the H contract last week, so this is a Friday night, last week on Thursday. So 8 calendar days. Well, that might not be the best time to roll it over, right? And so you might want to roll over when the volume is greater in the forward-looking contract. So in this case, you would go back into chart settings, make sure that this is unchecked, because if it's checked, it'll use the global symbol settings. And then if you want to use the volume base, you go into global settings, general 4 tab up here, and it says detect rollover of current futures contract symbols based on real-time volume. So then let's say you were in the Z contract, which would have been December, and as the H contract started to actually trade more volume, you would get the big yellow clickable message that says volume has been exceeded. Do you want to roll over to the newest contract? And you could click that, and then you can select the new contract and roll into it. So that's all that it is. That's all you have to set. And I think this is advantageous because I'd rather trade the higher volume contract most of the time. And you know, if I've got all my charts set like this, it's not going to do it automatically for me, but it will give me a suggestion at what I think is near the proper time. Okay, so there's that. And then on this trade, you can see that we opened right down here. We came up, we did a whole lot of volume the first few opening minutes, and as you can see, the point of control for the open was right here, and that tends to be pretty important. So when we rallied down and rallied back up, right at this level here, right, point of control, it is tradable, right? And As it rejected here, I got short, and I put my stop right up here above the highs. I got in right here, and so my stop was 2.5 points, and then my profit taker was down here, and so I took 4.5 points, and that's it. It was just a nice scalp. Wish I would have taken more, but for me that was really good edge. And if you've watched my Monte Carlo video, you know that, let's see, this is a good setup. If you can get 70% right at a 1.27 hour or so, which is about what the trade was, then you're well on your way to profitability. So this chart's fully developed, so it's harder to see everything. Draw a volume profile and get it active, and then that way you guys can see what this looked like into this bar. There you go. So you see this, right? As this is developing, this outline here, which, let's see if we can zoom in just a little more here. There you go. This outline here would have been what this all looked like, right? Here's after bar 1. You see the POC right here, right? It's labeled POC. After this bar, POC is still up there, right? And then POC, we do some volume down here. We spend 2 bars, side by side. We get this big inside bullish bar engulfing. And then as we come back up to this area, right, you can see that now we still have some, and I'm asking you to look at this, this very white color, right? You can see that there's still very high volume here, and that's opening volume. So it just tends to hold a lot of trap traders. And so anyway, when we came up back up here to POC, then you saw the rejection. But it is useful to look at this draw volume profile if you're trying to explain something after the fact, because this profile looks different than it did, or different here than it did early morning. So that's the trade, and I hope you guys have a great week. Please like, share, subscribe. If you have any questions whatsoever, especially about Sierra chart, come into our Discord. There's invites in both the YouTube header and my Twitter, about me, kind of the bio, and we have like an army of knowledgeable Sierra chart users there. And go kindly ask in the Sierra chart text channel for some help, and maybe somebody will be willing to help you. Again, it's all free, so stop by and come join the crowd. Maybe provide screenshots of some of your settings if you think they're really cool, and you think others would see value in them, and just come say hi and check out some cool resources. Anyway, have a great weekend. Thanks for watching. Take care.